Good afternoon, all. I guess I'm going to take the first step at the private sector angle. Just by way of introduction, GuarantCo is actually a partnership approach that was actually set up about 10 years ago by a few governments around the world. We are actually part of the Private Infrastructure Development Group, which is actually based out of Mauritius. And for us, as part of the guarantee arm of the pitch, our main focus is really to enable long-term currency financing into infrastructure development. So particularly on the aspects of climate, what we're doing towards supporting climate action initiatives as part of the infrastructure side, we are looking at specifically how do we support and attract capital into sustainable financing approaches for sustainable cities, clean energy development, and efficient energy efficient initiatives around in the countries that we operate in. This is just the sort of areas that we actually countries that we work with, and you would notice that the bulk of the countries that we are focusing on is what we'll call the DAC 1 to DAC 3 countries as part of the OECD definition. So countries, when we say eligible countries, is where the investors, be it within the country and outside the country, are looking at infrastructure development opportunities. We act as the catalyst to enable them to cross the bridge and help those countries attract development in infrastructure. So the way we do it, it's two prongs. We are very much focused on how do we increase private sector participation in infrastructure development. So perhaps lesser so working with the sovereigns and credit enhancing their issuances, but it's also to find out instruments and ways to help the private sector tap sources of financing, be it on the short-term basis or long-term basis, to enable them to carry out BOT projects, BOO projects in the countries that we are focused on. So I would say the LDCs, it's very much our bread and butter, and we are here to actually help to the extent that where help is required. Specifically on the capital market side, it's been an interesting one in terms of engaging or encouraging the private sector to tap the capital markets. Traditionally, it's been I would say a source of capital that is undeveloped in the basis that it seems a bit more complicated, challenging to actually go and assess capital in the space. So there will be, there are times when, as part of the earlier slides, where the country risk or the credit risk, it's not palatable to the investor groups. So what we do as guarantors is to look at a specific opportunity, be it at a project level or corporate level, where funding is required to be raised, and determine how we can actually credit enhance the projects to ensure that the risk appetite is more in line with what investors are looking for. I think there's always a question of whether do we establish our own local currency band strength, or do we tap the international US dollar financing. I think there are platforms around the world like the London Stock Exchange where it's increasingly attracting local currency issuances, but in a way that you can continue to tap the international appetite by settling in US dollars. But what that all means is that the ability of investors to actually hedge some of their investment requirements going to these countries. So that's really key to, one of the considerations you would think as investors, which currencies should I issue in? Now, there's obviously the choice of doing it on a private placement basis, where it's more bilateral, like liquidity, or you can actually list your issuances, more in the mainstream markets. So these are some of the areas where we have the sort of opportunities that we've helped our clients, particularly on the private sector, who is actually looking into going into, attracting finance for climate action initiatives. Are, for example, typically many of those corporates, I would say mid to large corporates, who are private corporates, who have the skill and ambition to actually deliver on the service provider side, but they don't have the relevant credit rating to attract institutional money to actually tap the sources of funds. And that's where we leverage our credit rating. We are AA- by Fitch and A1 Moody's to help clients of such nature to actually tap a source of investor pool that it's only available to sort of a certain credit risk profile.